Welcome to Markets Now. I'm Michelle Work with Scott Varilek with Kooima Varilek, and we're seeing grains mostly lower except for a few wheat contracts and some new contract lows again, I think, over in the corn market, while livestock futures, cattle are lower, hogs higher. Scott, let's talk about the break that we're seeing here in the cattle. Do you think that market is looking tired technically, or is, in the case of the live cattle, are we trying to price in weaker cash trade for this week?
Yeah, thanks for having me. And that's a good question, but it's acting weaker. I mean, it's kind of trading a little bit like a bear market here, and we can try to diagnose why, but I think the cash feel, to answer that part, we kind of entered the week feeling okay. So the South was kind of talking like they might actually get some higher cash even after a boost last week. So that was all feeling good. North still trying to get some steady prices around 198. Heard of one small deal in Iowa at 196, but that's not the up and down the road trade here yet. Packers are sniffing around, and it's that time of the month here. We're getting into August here. That first and second week of August, there's usually some good Labor Day buying by Packers where they make a little bit of a push. So we're in your window to probably try to, if you're hanging them on in the show list for a few weeks, this is this week or next week, I think you got to be selling those. The end of August is never that pretty. So just kind of knowing that going into these next few weeks, maybe it'll trip the cash a little earlier, just because guys want to sell now when it's seasonally higher. So I'm watching for that. I want to get cattle moved. I might sort just a little harder to make sure I get them sold here. These futures have acted tired, stayed very discount to the cash, and they're trying to tell us they think this market has topped, that there is going to be some downside and cash is going to come down, and eventually that's going to be right. I mean, I don't feel like it's this week or the next week, but I'm hoping that we can get some higher cash, and because I think these bounces now on some of these cattle contracts, you're going to want to be looking for some protection. Guys are starting to sell these rallies. We're at the bottom of the range right now. And every time you sell the bottom of this range in the cattle, it does turn around and come back. So for now, hopefully we can get some good cash news the next couple of weeks and get a little boost to do something with.
Yeah, but cash is held together considerably strong when you look at the seasonals for this time of year, and box beef values have held together as well. I mean, choice is right around 315. So that's been hanging on good as well, hasn't it?
Well, for sure. I mean, it's usually we get the Labor Day buying rally. Well, we never really broke from the all-time high. It got up to $198 to $2, and we just sat there all summer, which was great. So this will be the 8th week if we can kind of get it done. So I mean, once we got to those levels, we went right through when we're supposed to be making summer lows, and now we're thinking, okay, where's the Labor Day buying rally? Well, maybe if we can just kind of hold it steady here near these all-time high prices, I mean, maybe that's the victory right there. But so yeah, very impressive how it's held on all year long for me, for sure.
Yeah, we should talk just a little bit about the break yesterday in live cattle futures, though. Tied to China delisting a plant in Nebraska.
That seemed to be the thought. I don't know. I mean, we've already kind of been down this road. We've seen it happen before. So maybe we're getting a little bit used to it. And I'm sure there's going to be more, when China's in the field here, and they like to make the news and try to move the markets a little bit. So yeah, that was a little bit of a negative tone, but it's not the first one that we've seen. So I think we can.
That's because of ractopamine.
Correct. That is kind of the talk, the rumor that's why. Wouldn't surprise me that's why. We've got up and down the road using a product that China does not want. So it's not going to surprise me. It's very much into our industry, and they're not a fan of it.
Yeah, and they've done this before. This is kind of their MO. Let's also talk about, kind of where we are in terms of profit margins for producers. You look at the board, and it's pretty hard to look at the board with the big discount that we have to the cash and say, hey, there's hedging opportunities here. What are you seeing?
Yeah, that's the tough thing. I mean, up front, you're selling these upper 190s cattle. You're making money. You want to sell them and keep them moving. We feel like we're current. Carcass weights have not told me that we are, but I it's hard to see how we can still have those weights where they are, because we've got some hot weather upon us, and we've got cattle that
Yeah,
make
we're not
money.
trading it though, are we?
No, we really haven't penciled that into the market, I don't think so. Actively trying to take some profits now. It's moving forward. That's the tough part, because you get these calls. I've got some cattle, they break even at 196, 198. What do I do? And that's what we have to pay for the feeders that are out there. We know the supply is tight, and that's proving that going to continue to stay that way. So we'll always be able to fall back on that tight supply, but we've got this discount futures market that's not giving you a great opportunity. So I think you've got to try to figure out how you're going to manage. You're buying a $100 $200 a head loss here, so I think that's what you have to try to protect, is making sure that it doesn't get out of hand on the bottom side. So knowing that going into that kind of a break even, I think you still have to look at some kind of plan that it's going to take a little bit of extra grease to try to figure out what we want to trade and how to do it. But I don't like the way that this market acts, the way that it's drifting lower, and now it's going to challenge the bottom side of the range again, and it's getting tougher to try to rally it. So looking to try to do something. I don't want this to be the turn that just waxes us out. So we got to be very aware that, yeah, I know we're tight on numbers and it should be okay, but it doesn't have to be. And the futures are trying to tell us this thing could go lower.
Yeah, it's a continual tug of war, that's for sure. Okay, meanwhile, the hog market back up, and really we've been pushed here by cash. That lean hog index has been up, I think, 13, 14 days now?
Yeah, an index that's laid here since April 15 in this little small range is finally trying to put a little rally on. So cash has been better. The cutouts maintaining a pretty good level. So doing okay. They finally broke that long downtrend that they were on, got a little recovery, and now they're maybe trying to find their solid ground here, which is good. Maybe we can try to tie it to fundamentals a little bit more now that the big, technical look on the chart for downward is over. So we've got a little bit of tighter numbers here in the short term moving forward. I think that means well, and we've got the weather's also having an impact on them. I mean, the weights are coming down. They're still 6 pounds over a year ago, but they are coming down. They was 10. And I think we'll see more of that in the short term here. And then I think this heat does also help out a little bit.
You bet. Well, speaking of weather, we've had some rains this week over some key areas of the Corn Belt, and we've been scoring some contract lows in both corn and soybeans. Is this market trading record yields here, and does that mean we're going to keep grinding to new lows?
That's what it does look like to me. I mean, we're in the end of July and beginning of August, and seeing some nice moisture coming across some of the Corn Belt, and it is looking like we're penciling in a record crop and big yields. It certainly has the potential to do so. We're going to see some very impressive corn and soybean yields. We've already seen the big wheat yields coming across. So I think that's what we're penciling into the market, and it just feels like a slow drift, and it's not like we're down 20 cents or 30 cents in a day, but just that couple cents grinder lower every day, new contract lows, and not finding those buyers to try to come in and turn it. So even as an end user, you see this big crop coming. So you're not even that worried about it getting away from you on the upside. So it looks like, unfortunately, still a steady drift until we get some new news to try to throw at it. But because the weather has not been helping, the crop's going to be good, and that's what we're penciling in and what we're trading.
Unfortunately, that's right. All right. Thanks for joining us. Scott Varilek from Varilek. This is Markets Now.